All right. Hey, let's open this up. Can we see? No camera. All right. So we are looking at this crude oil trade that we set up here. Will it come back and actually hit our zone? Um, let's see here. Will it come back and actually hit that zone? So we placed this trade using TrendCloud. Okay. TrendCloud gave us the setup. And you can see that we are in, let's get over to the 4 hour chart here. 4 hour chart on the high time frame is down. We are impulsing down. Momentum is down. That's a lot of force to the downside. But our intermediate chart um, has not caught up to that yet. It's still bouncing around here, fighting between the buyers and sellers, right? What we have going here is the CCI indicator is below negative 100. Okay, that is our indication that we're going to start to rejoin this downtrend. And where is it going to hit? Well, it's going to hit somewhere in here. And I believe this is on let's go to that 5 minute chart. And on our opening range breakout tool, we're going to be looking at the 5 minute opening range. Let's open this up. And so we've boxed out that drop base drop on the 5 minute chart. And this is going to look like it's going to be a very nice trade. So it actually pulled back this morning around 10 here. It pulled back and just hit that proximal line. So hopefully, hopefully it pulls back, goes just a little bit deeper into the zone, and then makes a move. Okay. And you can see it's starting to react off of that area. But you can only trade what you see, right? So it's about a $290 risk. If that's too much, you can go to the micro account, and you can place the same trade on the micro account right here. Same trade on the micro account. Wow, it's really reacting. This is a super powerful. There's a zone here. There's a lot of energy to the downside. Let's see, sell 4 contracts. There's your stop loss. So 4 contracts is about a $112 risk. If that's more within your risk tolerance, then that's what you would do there. But let's go over this really quick. I went over it in the live stream, but TrendCloud is red. Candles are red. Cycling down. So we're in an impulse phase on this downtrend on the high time frame. Momentum is also with us. Very powerful. That's very strong to the downside. Intermediate time frame here. What we're looking at is specifically the CCI indicator. It is below negative 100. That gives us the okay to take any supply zone that we see fit. Okay, and the reason why we're taking this supply zone on the lower time frame here is because that's where the breakout took place. This is the opening range breakout, the 5 minute opening range breakout on crude oil. We always use the 5 minute. On the equities, we would be using the 15 minute, as well as on gold and the metals, we would be using the 15 minute. But this is an energy stock, so we're using the 5 minute. And it broke out to the upside, then it broke out to the downside, pulled back, gave us that retest, made a nice move down, and now we're retesting this zone because you can see on the micro, it did not quite hit that proximal line on our supply zone now, did it? And look at that. It came back, it hit the bottom part of the opening range, and it looks like it's taking off. So you never know, right? But that's the setup. Like, oh, well, how come you didn't take it here? Well, because the drop base drop is here. And what it's doing now is it's pulling back into this area here. It's pulling back into this area here that that actually made the move down. We'll just turn it. We'll just make that blue. Okay, so maybe if we drop down to like a 3-minute, we will probably see, yeah, there you go. So you can see that rally-based drop on that 3-minute chart. Now, I never go below 5 minutes. That's just me. But you're definitely, you're definitely making a move here on that 3-minute rally-based drop. So you see how you can shift gears from one chart to the next, but you have to start with that high time frame. So the context of the trade is always taken on the highest time frame that you're using. And I use, with the TrendCloud system, I use a 3-chart trading system. I want to know the context of the trade on the high time frame, and then I want to know what is the strength of that trend on the intermediate time frame. And in this case, it's telling me that the strength is to the downside. Okay, even though you see an uptrend on that middle chart, this is where a lot of beginners get confused. This is just part of the higher time frame context. Okay, so the middle chart here is is this is part of that corrective move pulling back up into that high time frame downtrend. So the corrective move is starting to end, as you can see here. It's just getting lower and lower and lower, and you've got this sort of wedge pattern here forming. Right, got this right here. It's kind of like wedge pattern. Right, it did make this little false breakout here. Okay, so that's what that looks like, that little wedge pattern there. So it's in a fight, right? It's in a fight. We're saying the downside, the sellers are going to win. That's what we're saying in our analysis, because high time frame, trend cloud is red, candles are red. We are impulsing down on our cycle indicator. Momentum is red. Okay, so we're down. We got red, 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 and red. So we're the force to the downside is very strong. Intermediate time frame, CCI indicator is below -100, very powerful. So what do? Well, we look for supply zones on our lower time frames. It's making a little reaction off of this, but remember, the higher time frames are always more significant. So a 5-minute chart, I should say, so a 5-minute chart is going to be more significant than a 3-minute chart. It's going to hold more weight. Let's just put it that way. A 15-minute chart is going to hold more weight than a 5-minute chart. And as you can see, we do have on this 15-minute chart a rally, base, and a drop. Okay, so we've got a rally-based drop on the 15-minute chart here as well. Let's get rid of these lines here. That's our wedge. So on the 15-minute chart, the full zone would look like that. If you wanted to take the full zone, it's more like a $200 risk on the micro. If $200 is too expensive, you simply drop it down. Okay. Now we've got $150 risk. Maybe that's more your speed. But now you've got a 15-minute supply zone. Okay. And this is our little 3-minute supply zone. That is that gave us a little bit of move, so maybe you scalped that 3-minute zone. But we've got a 15-minute rally-based drop here, and that might be where this wants to go. Now, you can also see that we've got the previous day's close here protecting us. All right, here's our stop loss. We've got the previous day's close protecting us there. And That comes with the TrendCloud system. Okay, so you get all of this with the TrendCloud day trading system. You get the opening range breakout, the G trap, the zone scanner. Okay, you get the risk manager here as well. The risk manager is going to tell you how many contracts you can trade. The VWAP is actually free on TradingView. But a lot of people like using the VWAP in conjunction with TrendCloud. And you can see we're below VWAP and it's pulling back. So if we get that pullback into this 15-minute supply zone, it would just break a little bit above VWAP and hopefully make that nice move down to some structure down here. We got the previous day's open, previous day's low. And I love having that on the chart, right? I cannot go drawing these lines manually. That drives me crazy. I wanted it programmed right on the chart for me. So we've got that in our opening range breakout tool. And that's it. So let's see if this trade works out. And hopefully we can, make some money back down to these levels of support here. Okay, and again, on the higher time frame, on the full contract, oh, look at that. It came so close. So close, guys. So this is more of a $300 risk. Take it back down to the previous day's open. So that's about $700 profit there. So not bad. You're risking 290 to make 700. That is a legitimate trade there. So let's see if this works out.